Well, he's very consistent. That was August of 2023. I interviewed him at the Bedminster Golf Club, and his ring around the collar was the baseline tax, and he stayed 10%. And we got it today. To talk about this, John Carney, economics and finance editor for Breitbart News and co-author of the daily Breitbart Business Digest, the great Steve Forbes, Forbes Media Chairman and Editor-in-Chief, and Dan Clifton, partner and head of policy research at Strategas. Gentlemen, welcome. So, John Carney, it's not going to be both. You'll get hit by the reciprocal charge. Let's say for China, that's 34%. But they will not have to face the 10% baseline. Now, they have other tariff issues, right? 20%, but you can't have both. It's one or the other. That's right. Do we all agree on that? Because there seems to be a lot of disagreement. Yeah,
take the clearest one. The EU reciprocal tariff rate is 20%. That is the rate. It's going to be 20%. It's not 20 plus 10, which would be 30. It's a lot lower than that. It's 20%. So there's been a lot of confusion about this, and I don't blame people for being confused. The White House has not been clear on this. But my best understanding is that the 10% is a floor, and the reciprocal rates are not 10% plus the reciprocal. It's you get the reciprocal rate on that chart.
You can't go below 10.
You can't go below 10.
All right. And Dan Clifton, I don't think the stock market, which sold off 1,100 points, now it's off 1,000 points in what we used to call moonlight trading. We'll call it aftermarket trading. I don't think the stock market necessarily knows that, or does it matter?
So, yes, it does. The market was priced for about $215 billion of tariffs, and we came in way above that. And for some specific countries, it's going to be very large, like China. And so from that vantage point, there's going to have to be a sell-off. But you also get the certainty, and you'll get that clarification on the 10% rate. Both of those are going to help. I have to tell you, Mexico and Canada were big winners today. There's no 10% tariff on Mexico and Canada. It keeps the USMCA. Some other countries did okay. Brazil did okay, probably better than expected. Australia did better than expected. But for most countries, this is going to be a very, very large tariff increase. You look at something like Vietnam, you're looking at a 46% rate on Vietnam. It's about 10% of their GDP. So I think this is going to have a much more adverse reaction for non-U.S. stock markets than it will for U.S. stock markets.
Just real fast, I want to get to Steve Forbes. Annual revenues coming in around $600 billion. Okay, that's what Byron said. It's a very big number. Steve Forbes, that's a lot of money sloshing around. First of all, I want to ask you what you thought about the speech and the thrust of the speech. And then second of all, what to do with these revenues. I think a lot of ordinary Americans will look at this thing and they'll see the numbers and so forth, but they're going to ask, so if you get all this money, what are you going to do with it?
Well, we know it has to be done and done fast. Take that $600 billion, add in the shock to supply chains, which is going to be disruptive for several months. So make it $1 trillion. President Trump should call up the Senate, call up the House, Jason Smith, head of the Ways and Means Committee, say add $1 trillion to the tax cut, because we're going to need it to get this economy truly growing, or we're going to get wiped out in 2026 elections.
You think, you talk about the supply chains, talk about price increases one time or whatever. In other words, you're worried about the straight economic impact of this.
Yes, and a lot of these companies, small companies, have small margins, and they're going to be hurt. So again, you've got to have a massive tax cut to help ameliorate that situation, and that's why I'm just appalled, not appalled, but shocked that the White House hasn't been more forceful with the Senate, with the House, in starting to get a massive tax cut instead of getting caught up in all this junk about small stuff that they all want to put in a big, beautiful bill, but they're tarting it up.
Well, I asked Speaker Johnson straight out about it, and he said he was very sympathetic. He is a supply-sider. I think Steve's right, though. It hasn't been fully thought out. Actually, I know you want to talk about the tariffs, but rumors, the Wall Street Journal editorial, Republicans for higher tax rates, individual and corporate income tax rate hikes are on the table as the GOP negotiates its reconciliation bill. I think they're negotiating with themselves. Really higher tax? You remember the late, great Bob Novak. He said this great line years ago. He said, Republicans were put on this planet to do one and only one thing, cut taxes, okay? That's all they're good for. Now they're thinking about raising some of these taxes?
Any Republican that is considering raising taxes should be dragged out of whatever committee they are chairing and given a stern talking to. I don't want to say what really should happen to them because people will freak out.
Yes.
Well, give them a paid vacation to North Korea.
They need to go. They need to go away and get out of policy making. We absolutely need tax cuts. We needed tax cuts before these tariffs were announced. I'm a big supporter of these tariffs, Larry, as you know. But we need to couple them with pro-growth economic policies. The reshoring cannot happen. This is based, as we talked about earlier today, this is based on the idea that we are going to bring a lot of production into the U.S. That's a costly, capital-intensive thing that we're asking companies to undertake. We need to be giving tax breaks to make that happen.
I don't hear, Dan, I know you cover the Washington beat, but I don't hear the senators, I don't hear anybody talking about the linkage between the tariffs and the reconciliation bill, principally the tax cut part of it. I think people have to start putting the two together and realizing, because Steve Forbes is saying, you're going to need a cushion here. Look, Mr. Trump himself has said there may be short-term disturbances, okay? Right. We had Senator John Kennedy on last night or the night before. He said the same thing. He's a pretty smart fellow. There has to be some linkage between the tax cuts and these tariff increases.
Absolutely. Listen, Larry, I don't think that there's much disagreement on what should be in this tax bill amongst members of Congress. The debate is over how much spending should be cut because spending is 24% of GDP. At some point, they're going to have to resolve those issues. This tariff proposal is a doubling of the corporate tax rate itself. Now, if you remember, Donald Trump lowered the corporate tax rate from 35 to 21%, had enormous prosperity. I don't think he wants to be viewed as the guy who doubled the corporate tax rate. If we can take this money and go to zero on the corporate tax rate, or look at all the consumers who are going to be shocked hearing all this tariffs that's going to impact them, we can deliver a pro-growth tax cut, then Mr. Trump would be delivering on all three of the promises he said in your interview on the lead-in here. He wanted a universal tariff rate. Yeah. He wanted 60% on China. We're at 54% based on this proposal. And he wanted to use that money to deliver pro-growth tax cuts to Americans. So you absolutely need this. And just extending the tax cuts won't be enough. No. You need marginal rate reductions.
You need more
to really drive this and build that wedge.
You have to be worried about the so-called transition. I agree with you, Steve. You have to be worried. We've never done anything quite this large. And, of course, it's going to be all over the news tomorrow and probably for days to come. There should be some assurances. I mean, people should get right to it. The tax cuts will essentially ease and soften the transition that Trump talks about.
Well, this is a prime opportunity for the White House finally to get out the message forcefully that every middle-class family faces a $3,000 tax increase if Congress doesn't do something on these tax cuts. So he should say, we want to spare you the $3,000 and add $3,000 to $5,000 of additional tax cuts, so you'll be better off whatever happens in the marketplace.
And Larry, I just want to say, a lot of Republicans say they're concerned about the debt. Look, I am too. But there's only one way we can get out of the debt. We are not going to tax our way out of our national debt. We're not going to tax our way out of the budget deficit. We can grow our way out of it, and that is the only way we can do that. We need the pro-growth tax cuts to make that growth happen.
The right use of these revenues, if they come in whole or in part, would be to lower the tax rate structure and grow. You want to get, you really should aim for 4% growth, okay, over a period of 10 years, whatever. 3.5% growth would be fine. They're always looking for 1.8% growth. The differentials in growth are enormous. So that's why I said to the Speaker, I'd like to reduce the debt to GDP ratio by growing the GDP part as fast as I can with the application of these new revenues if they come in to further tax cuts. That's all. I mean, I don't know. It's just, but no one's making the connection, Dan Clifton. I mean, we'll listen tomorrow. Maybe this show tonight will get some people to think about this. You're going to have to cushion this transition. Steve Forbes is right.
Well, again, if it's not going to be President Trump, who had a pretty big chance to do that today, then it's got to come from Congress. And I have to tell you that the Congress is thinking about having a vote on the Senate floor that would President Trump's tariffs on Canada. So you're already starting to see some uneasiness build
This
here.
is this Tim Kaine,
Tim
senator
Kaine, yeah.
from Virginia, Democrat, in the Senate floor.
4 Republicans
When's
are
that
there.
When's that
vote was supposed to be yesterday, but Cory Booker took up most of the time.
Yes.
So it could be today, it could be tomorrow. And my point is, the leadership has to come from Congress. It has to be Speaker Johnson, Senate Majority Leader Thune, standing up and saying, we're going to deliver a pro-growth tax cut. They can do that tomorrow, and they can get that budget passed and start the reconciliation process almost immediately on those tax cuts and get this done within the next 30 days.
All right, let's take a break. We're talking to John Carney, Steve Forbes, and Dan Clifton.